Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX, and we'll start with the North American markets. The Institute for Supply Management released the Manufacturing PMI yesterday. It came out 0.8 worse than expected, raising some doubt about the strength of the economy in the final half of the year. The prices paid came out 5 points worse than expected, and market manufacturing PMI as expected. Construction spending month on month was 0.5% worse than expected. Inflation showed little movement. The PCE price index, the favorite inflation gauge of the Federal Reserve, increased 0.2% in June. The PCE index has risen just 0.3% in the past 12 months. The more closely followed core PCE index, that includes food and energy, advanced 0.1% in June, and it's up 1.3% over the past year. S&P 500 index had a range of 22 points at 2090 now, and the Nasdaq closed 15 points down. The Dixie went up only slightly to 9740. Today we'll be expecting the RBC Manufacturing PMI and factory orders month on month. Onto the EU markets, we had the EU, German, French, Italian market services PMI, all slightly better than expected and better than previous, above 50. Trading in Greek stocks on the Athens Stock Exchange began again Monday after a 5-week closure. It tumbled down 23% and closed down 16.2%. Even so, European stocks closed higher Monday, shrugging off the Greek equity market's dive. The DAX 30 went 100 points up and CAC 40 30 points up. Investors will be looking forward to today's news, the EU Producer Price Index. Onto the UK markets, the market manufacturing PMI month on month came out with 0.3 points worse than expected. The FTSE 100 moved down to a total of 19 points and closed at 66.13. The 10-year gilt yields were at 1.867. Today we have the PMI construction data for June. Onto the Asian markets, where in Australia we had the interest rate decision. It was not changed at all at 2%. We had the trade balance at negative 2.9 billion, which is better than previous. Exports at 3%, higher than previous of 1%, and imports at 4%. The retail sales came out 0.7%, which is 0.3% better than expected. In the Australian statement afterward, it was said that the entire precious metal sector is being dragged lower by gold. Investors are deserting precious metals as the outlook for higher US borrowing costs boosts the dollar. Australians' eye are on the USD as a safe haven. The Australian dollar held near a 6-year low before the Reserve Bank of Australia set interest rates. Even after better than expected trade and retail sales data, the Aussie held a decline from Monday when disappointing manufacturing readings in China deepened concern that demand for raw materials will decline even more. Today, we basically have a 10 points up or higher movements on the Australian dollar pairs. Tomorrow we have unemployment data from New Zealand and market services PMI in Japan. On to the last sector for the day, commodities, where oil fell to its lowest in 6 months on Monday, knocked by fresh evidence of growing oversupply and data highlighting slowing demand in China. This is leaving crude prices set for their weakest third quarter performance since 2008. Gold had a range of $15, trading at $1,087 now. Silver had a range of 35 cents at $14.54 now. Crude had a $1.80 range at $45.54 now. And natural gas is trading at $2.76 at the moment with a range of 8 cents. Thank you, everybody. This was today's European Session Outlook. I'll see you next time. Goodbye.